Greetings, ladies and gentlemen. I hope you are all still doing great. And if it's hard, hang in there. Hang in there. The journey is not easy, but then it will be worth it in the end. That's what I can tell you, and that's what I can promise you. Just hang in there and keep pushing. So, we hope you are getting something from these lessons. We hope it's something powerful. We also hope that you are getting something from our Telegram channel, the PDFs, the audios, the videos, each and every content we give to you guys. We hope you are getting something from it, even if it's not from us. Wherever you're investing your time in, we hope you get something valuable from it. We hope you get your time's worth, because time is something you can never take back. So it's really valuable. Okay, with that being said, let's get into today's lesson. Today's lesson will be on the visuals. We will be dealing with the visuals because in the past videos or the past days, we talked about price. Everything was around price. If you've noticed, we talked about the price of the currency pair, how price is quoted, the bid and the ask price, the spreads, and all those things. So right now we'll be dealing with visuals, because I'm sure some of you might have asked yourself, they are teaching us about price, but then when we log on to our platforms, our trading platforms, we see these kind of things. Excuse my drawing. These kind of things, we don't know what's happening. So yes, that's what we will be dealing with today. These things are called candles or candlesticks. They are the visual representation of price. Okay, these are just a few drawings of the candles. There are different types, and you'll understand how they come about. Okay, this is bad. My drawing is bad. So yes, these are candles or candlesticks, but then we'll call them candles. We have different types of visualization of price on the market. We have a line chart. We have a bar chart or bar graph. It can be graph or chart. Also have candles or candlesticks. But then our main focus will be on candles. We'll be dealing specifically with candles. So before we get on the visuals, okay, we're already on the visuals. Before we get into these candles specifically, you have to know something, and that something is that the Forex market runs 5 days a week, 24 hours each day for 5 days, and that's from Monday to Friday, or from Sunday, depending on your time zone, if I can say. So it's 5 days, and what runs on the weekend is cryptocurrency and others. But then Forex, it's strictly 5 days. It opens Monday, closes Friday. So from those 5 days, it's 24 hours each day, like the whole length of the day. It's not from 9 to 5, 9 to 7, or whatever time. It's 24 hours. So it keeps on running. Just that for the start of each day, there will be what we call a day break, like some sort of a reset, if we could call it. That's where you'll experience gaps. Then you also see that the spreads are also increased. You'll see gaps in prices, and you'll see that the spread is increased, because it's signaling the start of a new day. They are ushering in a new day, so the spreads are also increased, because things like swaps, rollovers, many things, you'll get to know them as you progress. But then right now, let's deal with what's important. So from Monday to Friday, you'll find 24 hours in a day. Then you'll find that in hours we find minutes, then in minutes we find seconds. But then we won't be dealing with seconds. We'll dealing with minutes, hours, well, then we go to a day, then week, then month. So that means we'll have what we call time frames. We'll have what we call time frames. We'll have what we call time frames. So we'll be dealing with 5 time frames. Let me just say TFs, time frames. So we'll be dealing with 5 of them. We're dealing with the 5 types of time frames, which will be the minute, the hourly, the daily, the weekly, and the monthly. There's also yearly. It's rare, but then we'll be focusing on these ones because that's what you will usually see when you log into your trading platform, either demo or real. So what these time frames mean, they simply visualize price, because we were talking about price, we were calculating price, but then there has to be somewhere where you see movement, because you cannot always talk about something, you have to see it so that you understand its pattern. Remember that when you want a strategy, you have to sometimes find patterns. So that's why some of you, those who've been trading, you'll hear what we call price patterns. So you have to see this pattern. So the seeing part, that's where the candles come in. Then these candles, they have time frames. We just do this. We have candles, then we have time frames. So for a specific time frame, follow me. For a specific time frame, we'll have a specific price movement that will lead to a candle. Because remember, we say price runs for 5 days a week, 5 trading days a week. So price will keep on moving during those days. But then in order to be able to quantify, if we can say quantify that price, there has to be, what can I say? It has to be calibrated, if that's the word. It has to be shown. It has to be organized so that we can be able to break down its movement, so that we can be able to analyze its movement. So that's where candlesticks come in. We will have price for 1 minute, the movement of price for 1 minute. Okay, let me start with the time frames, and I'll only be focusing on those which are generally found, the time frames, because we have different time frames for different brokers. But then what you should just understand is that they simply show the movement of price in a specific time interval. So we will have the 1 minute time frame. It shows movement of price for 1 minute. This shows a movement of price for 1 minute. Like if price goes up, down, and wherever for 1 minute, that's where you will find it in the 1 minute time frame. Then we also have the 5 minute. Similar to the 1 minute time frame, it will show the movement of price for 5 minutes. Then we have the 15 minute. Time frame, which will show price movement for 15 minutes. We also have the 30 minute. Time frame, which shows price movement for 30 minutes. So how does it show this price movement for 1 minute, 5 minutes? It shows it in the form of a candle. That's why you'll have a 1 minute candle, you'll have a 5 minute candle, you'll have a 15-minute candle, you'll have a 30-minute candle. For a 1 minute candle, it means that the candle will be formed every 1 minute, and it will show that. Remember, it's visuals. So that means that candle will show the price movement for 1 minute. Then for a 5 minute candle, it shows that for every 5 minutes, a candle will be formed. Remember, it's time intervals. A candle will be formed, and that candle will be showing you the movement of price for 5 minutes. If it's 15 minutes, the same applies, the same rules apply. The candle will show you the price movement for those 15 minutes. That means every 15 minutes, a candle will be formed. Then for 30 minutes, the same. For 1 hour, for 4 hours, for daily, for weekly, for monthly. I hope I'm making sense. So the time frames are, we have 1 minute, we have 5 minutes. Remember, they are visualization. We have 15 minutes. We have 30 minutes. These are minutes. Then we go on to have 1 hour, 4 hour, 1 day or daily, 1 week or weekly, then 1 month or monthly. So these are the time frames. So whenever you switch to the time frame, it means it will show you the price movement for that particular time frame. That means that the candle will show you the price movement for that particular time frame. So if you're switching to a 1 minute time frame, it means you'll see a 1 minute candle forming. Like every minute a candle is forming. But then if you switch to a 5 minute time frame, you will see that a candle forms every 5 minutes. You go to 15, you will see that a candle forms every 15 minutes. Before I go to the constituents of a candle, you have to notice something, because they are interconnected. There's relations to these time frames, because for a 1 minute doesn't mean that since the price is on a 1 minute, it won't be there on a 5 minute. No. What you'll find is that for a 5 minute candle, you'll find out that they've taken the overall movement of 5 1 minute candles. Remember, 5 minutes are composed of 1 minute times 5. It's 5 1 minutes, so they equate to 5 minutes. So what happens on the 1 minute time frame will also be seen on the 5, depending on which time frame you're viewing. It's just that on the 5, the candle won't form every 1 minute. No. But then you will see the price action of 1 minute happening on the 5 minute candle. I hope I'm making sense. Let me just go in deeper so that we are on the same page. Let's start this out with basic maths. In a 5 minute time frame, you're going to find 5 1 minutes. I hope I'm making sense. You'll find that there are 5 1 minutes in an overall of 5 minutes. 1 minute plus 1 minute plus 1 minute. 5 1 minutes will make an overall of 5 minutes. So this is what you see when you open a 5 minute chart. You'll see the overall price movement of 5 1 minute candles. I hope this makes sense. The same goes to, let's say, a 15 minute. A 15 minute will be composed of the price movement of 15 1 minute candles, 15 1 minute candles, and also 3 5-minute candles. You must be following right now, because remember, you find 3 5-minute candles in one 15-minute candle, because 3 times 5 is 15, then 1 times 5 is 15, and that 1 is for 1 minute. 3 times 5 is 15, and that 5 is for 5 minutes. Then you'll find the overall price movement of 5 minute. Okay, sorry, let me go back. You'll find the overall price movement of 3 candles, which are 5 minutes each. You'll find them in a 15-minute time frame. Okay, I can feel that I'm losing you, because I'm also losing myself at this point. Let's break this down. Because we have people having problems here. They ask what time frame is the signal on. The time frames are the same. Price is price. If you find that price is but then you can use the time frames for analysis, your entries and exits. But then with regard to price, if price is at 1.4560, it will be on that price for each and every time frame, from 1 minute to the 1 month time frame. You will see this. If you switch the time frames, the price will still be this, just that the difference will be the number of candles, because remember, the candles are formed in intervals. For a 1 minute time frame, you will have a candle forming every 1 minute. For 5 minutes, the candle will be forming every 5 minutes. For 15, just like that, up until 1 month. That means the 1 month candle will have fewer candles as compared to the 1 minute, because a monthly candle forms 1 candle every month, whereas a minutely candle forms 1 candle every minute. So they won't be the same. Daily candle forms 1 candle every day. It forms 1 candle. But then the price movement is still the same. What happens on the 1 minute will also happen on the 5, on the 15, the 30, the 1 hour, the 4 hour, the daily, the weekly, the monthly. Price movement will appear across all time frames. Just that there will be what we call lower noise, or drowning out of the volume, when the time frames increases. Because remember, if you have a chart, a 1 minute chart and a daily chart, just picture the two. A 1 minute chart will have candles forming every minute, so it will have many candles, whereas a daily chart will have candles forming every day. So you see, if it's for, as let's say, we take the period of a week, a trading week. If you go to the daily time frame, remember it's 5 days, you will see 5 candles for that particular period of a week, a trading week. You'll only see 5. Remember, it's 5 days, as I was saying. But then for that period of 5 days, if you count the minutes, remember we started off with days, it's 5 days. So that means for daily, you'll have 5 candles. You have 5 candles for the daily time frame. But then if we go to the minute, the 1 minute, just calculate how many minutes are in a day, then multiply that by 5. So you see how many candles you'll have in your chart. there'll be a lot more than 100 candles will be evident for that period of 5 trading days. But then on a daily, you'll just have only 5 candles. So you can see that the noise has been drowned out, or the volume has been drowned out. So a five a daily time frame is yeah, we can say more clearer, although it takes time to form. Remember, a minutely time frame will consist of candles being formed every minute. So every minute, just for the past minutes I've been talking, that means a candle was formed for the past minute. There were candles forming. But then for a daily, since this day is not over yet, there's still a candle which is to be formed. It hasn't been formed yet. It's not complete. It has started, but it isn't complete. So, which brings us to the next, I could say, chapter, which brings us to topic, whereby we will talk about candle formations. What forms a candle? What forms a candle? I think it should be in a different lesson, because there's no point in rushing to cram all this information in your head, whereas you won't be able to understand it or apply it or practice it. So the next lesson will be specifically on candle formations. It will be on candle formations. So for today, let's just stop here. Practice this. Use whatever material which will lead you to understanding this, so that you can get these things. Because if you miss such things, then we will be lost. We will be lost. Revise, and put. You have to work hard and smart. Don't just work hard only, because you work without direction. But then you have to work smart too. Have a direction. Have focus, like I said in the beginning. Understand these things. Then it shouldn't be that hard going forth.